morning and how do you do, ladies and gentlemen? I'm your host, Seth Julian, welcoming you to today's morning coffee briefing. We are going to talk about the elephant in the room of FX. Those of you who've been trading and following the signals about FX, you are well aware that the dollar is inordinately powerful. That is to say, strong. That is to say, it makes other currencies weak. I want to show you the first graph today, which is called the DXY, the Dixie, or the US dollar index. This is a trade-weighted average of the US dollar versus 6 of its major trading currencies. As this graph ascends, it indicates the ascending strength of the US dollar. It's an index, it's not a currency pair. As you can see from I guess, from early 2021, when the recovery gets well underway, the U.S. dollar is vavoom. It takes off. It's miles above the 200-day moving average, well above the 50, and sort of just kissing the 20-day, but that's much less relevant given the distance from the 200-day EMA. Volume is tremendous. Force index is well into positive territory. That indicates a strength, a likely continuation of that trend in the dollar's strength. But more importantly, or no less importantly, is the concurrent weakness of the Japanese yen. By design, I might add. The Chairman Kuroda of the Bank of Japan is insistent that a weak yen is in the country's interest, and who am I to disagree with Chair Kuroda? He knows what he's doing, and he is intent on keeping the yen weak. So, we have, therefore, some terrific trades. Here is the Aussie versus the yen. As that rate goes up, that means, let's just have a quick digression here on what these pairs mean. The factor on there's always, all assets are paired. There's no absolute value of anything. When you talk about oil, you mean oil versus the dollar, because it's priced 1 barrel of oil per dollar. And how many dollars buys one? So that left-hand element is called the base. In currencies, it's called the base currency. But even in gold, it's gold versus dollar. 1 troy ounce of gold per dollar. 1 bushel of cotton, 1 bushel of wheat per dollar. So there's always a pair. The exponent for the left-hand element is always 1, and the exponent for the right-hand element is what's imprinted on the y or vertical axis, and that's what's variable. So it's this, as this rate goes up, it means it costs more yen to acquire that singular Aussie or what have you. And that is true in all assets. So that's an important thing to understand, which the press regularly screws up by saying the yen is up. They indicate that it's stronger. What they need to say is that the yen is weak, but be that as it may. So we see that the euro-yen trade, the dollar-yen trade, look at this. Not hard to be able to see what to do in this case. So we've got the strong dollar, and again, when it's Kiwi dollar is the NZD USD. The dollar gets strong. It takes less US dollars to buy the 1 Kiwi. I hope that's clear to all of you. So we've got the yen weak and the dollar strong. And this is the final note that I want to make about the strong dollar. The reason the dollar is so strong is quite simple, quite straightforward, and very unlikely to change in the near future. The dollar is strong because the US economy is remarkably robust, particularly in contrast to the limping and about to be seriously stricken Euroland economy. China is on its knees with a lockdown of over 313 million of its citizens in a failed attempt to rein in COVID. And not to mention the fact that NATO is at war with Russia on the European landmass. So where is money going to go? It's going to go into the US dollar. Interest rates are rising because the Fed is the central bank of the United States. The Federal Reserve, commonly referred to as the Fed, is raising the cost of money, commonly referred to as interest, and that attracts other currencies that aren't paying as much interest to be converted into the dollar so that they can gain interest simply that's paid on the dollar. It's called the carry trade. You don't have to broker any stocks. You don't have to buy any assets. You just have to park your money in dollars in a bank, and you'll get a higher interest rate on that money than you will in an economy that is not paying as high as the U.S. interest rate is paying. So, ladies and gentlemen, that's the situation. The FX Roundup, strong dollar, weak yen, lots of good trades on the horizon, and pound dollar. Think that's a hard trade to profit from, ladies and gentlemen? I don't. Swissy yen. Huh? You get the idea. Keep your eyes on this space. There's great trades available. It's not likely to change in the near future. So, ladies and gentlemen, with that slightly over-length session today, I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now.